Hello, my name is Les Sulgrove, and many of you know me as the MLS director for No Coast MLS. Some of you know me as Stat Guy, and so we've kind of combined the two. I'm still the MLS director for No Coast MLS, and with my love for market statistics, the Iowa Association of REALTORS has added a new layer of responsibilities to me outside of the No Coast MLS world. You'll probably have seen me already, maybe talking to some of the media about statewide market stats here recently. And we thought, you know what, let's do something a little bit different and add some additional duties to this particular title. And so today, we're going to introduce to you the monthly market update for the state of Iowa for real estate activity across the entire state. This is looking at real estate stats from the state level, not focusing on any particular region. And so let's just kind of jump in a little bit. This will be a monthly show, and I'm going to change slides here for a second. And so what we have here at the state of Iowa, we look at all kinds of market statistics each month, and we put out the press release. And this is meant to go alongside that each month. And what I want to do is kind of go through and talk a little bit about some of these different key items at a little bit more length than maybe you might see me on the short Instagram posts and things like that. So let's start off today with statewide current housing inventory, the number of homes for sale. And it's been kind of interesting. I know that we all know that inventory is on the rise, and you can see that, basically from January on, we've seen an increase in inventory. In fact, this past month, we saw about 300 new homes come onto the market. In fact, that's well over, it's about 1,800 more than what we had a year ago at this time. And so inventory is always welcome in a real estate market. We like to see the number of homes increase. That gives home buyers a better opportunity to maybe find that home without having to rush out there and make a decision on the fly like they had to do during COVID years. We're certainly not back in COVID years right now. So this is a good sign to see the market inventory start to increase. However, there's a lot of mixed signals out there, and one of those is this slide. You can see that the number of homes added just in the month of June alone. So remember, we have 7,417 homes currently for sale, and that's an increase over last month. Yet we brought on fewer homes on the market the month of June, only 3,800 versus 4,200. In fact, that's about the same. That 4,200 for the month of May was about what we did a year ago in June. So we're down a percentage there, a couple of percentages there from a year ago. And you go, well, how is this possible? How can we have an increase in inventory, but yet have a decrease in the number of homes coming on the market? And it all has to do with this particular metric here, which is pending sales. You can notice that the pending sales are not keeping up with previous months from a year ago. In fact, the one thing I want you to notice here is June of 2023, right here, this 3449 number. This indicates the peak of the summer of the year last year. June of 2023 was when we had the most homes go under contract in a given month, and you can see that we are down right now to 2,914, and we actually peaked in April this year. It's not just the number of pendings as well; it's also the pace of sales. So when inventory tends to grow, it's for one of two reasons. It might grow because we have more homes actually coming on the market, which obviously that's not the case this year. We're seeing fewer homes come on the market. But the other factor that's in play that's allowing us to grow our inventory is that the pace of sales has slowed down and we're not putting as many homes under contract. Now, this isn't the world coming to an end. This isn't bad news. It's basically the recovery from COVID years. And to think that we were going to continue to have that same pace of sales from 2019 and from 2020 on is just unrealistic. And we've seen this past year, especially with mortgage interest rates on the rise. We've seen the pace of sales slow down a little bit. So this is why we're seeing inventory tend to grow without seeing as many homes come on the market. It's also obviously affecting closed sales. We're down a little bit from the previous month, only 3,228 homes closed versus 3,300. However, if you look back a year ago, June, we're at 3,800 homes closed in the month of June. So it's about 600 and some homes fewer closing, which means that we're on track to close fewer homes in 2024. Again, if you're following anything nationally, this is not to be unexpected. This is kind of right on track with where everybody else is happening. So it's not just something that's happening in the state of Iowa. As far as pricing goes, that's another anomaly that we're seeing, and that's the rise of home sale prices. The median sale price is at the high so far this year at $250,000 versus $238 a month ago and $235 a year ago. So we're $15,000 on the median sale price higher this year than we were a year ago at the same time, and a little less than that from just a month ago. And I would say probably the main reason for this is, again, it's affordability. You have rising mortgage interest rates that are now starting to come down a little bit. So I would like to see this number drop down a little bit next month when we have some more buyers that feel like they can jump in with affordability. But if you think about it, the reason why the home values and sale prices are a little bit higher, it's probably because you have the higher end of the market that's not maybe as affected as much by mortgage interest rates are still out there buying. And that does tend to take out some of the lower price points. So when we're looking at median sale prices, which means half the sales were above 250,000 and half the sales were below, that just means that some of those lower priced houses are just not selling in this past month or so, and that's rising that mortgage or that median sale price. So a couple more graphics here before we end the show for this program. Days on market, we are noticeably, still it's coming down. It's slowing down, or I'm sorry, it's speeding up throughout the year, which is typical for this type of a market. You can see that from January to February, the days on market tends to slow down, and then pick up, and then we slow down as we get to the summer months. However, we're about 4 or 5 days longer on the market than we were last year and last month. We've made an improvement over 43 days on the market, but this is more of a cyclical statistic. You're going to see this number probably drop a little bit again as we move into July, where the bulk of our sales tend to happen in that May, June, July time period. But then I wouldn't be surprised if we start to see the days on market pick back up before September. I think it's just kind of something we're going to tend to deal with as we move down the road here as the year comes to an end. The last slide we've got here, this is months of supply. Now, months of supply is basically, it's a metric that shows based on inventory of homes for sale versus the pace of sales. And essentially what 2.7 months of inventory means is that if no new homes were to come on the market, now we know that doesn't happen, they continue to come on, but if no new homes were to come on the market today, it would take just over 2.5 months to sell out all of our 7,400 homes that are currently on the market. So it's a metric that we follow that kind of gives a good sale pace. It gives an idea of the inventory levels that home buyers can choose from. We have 3 basic metrics that we talk about when we talk about months of supply. That is whether it's a seller's market, a buyer's market, or an even market. And we're currently in a seller's market. We're less than 4 months of inventory, which is the marker that says we're in a seller's market. We'd have to be between 4 and 6 months to be in a balanced market, and above 6 months of inventory to be in a buyer's market. So we're well into a seller's market still, even with the rise of inventory. So that kind of is really the show today. We're going to bring this back each month. We've talked basically this time only about single family homes. In future shows, we'll take a little bit of a look at condo townhome inventory, which is not much of a market across the state, but there are larger metro markets that do have that inventory, and that will affect our condo townhome stats from a state level. And we may also look at some other graphics, for example, the history of mortgage interest rates, especially when the Fed chairman decides to finally start to make some interest rate cuts, and we'll see kind of how that affects the real estate market. But at least for now, thank you so much for joining me. My name is Les Sulgrove. I'm the Statewide Housing Analyst for the Iowa Association of REALTORS. and get out there and sell some houses this next month or so. And we'll be back again next month with another report.